Hey everyone, it's Elise. Welcome back to my channel where I like to talk about all things personal finance. And today's video is a more informal chat about personal finance, particularly mine, and how I'm trying to wrestle with what I want to do with myself financially in, let's say, like a 5-year plan. I actually have two options that are actually in motion. Just because, I don't know, I may be a little bit more overzealous than the average person, but I'm realizing that I probably should pinpoint one thing that I focus on, because having your mind two different places isn't always as efficient, and I really am someone who's about efficiency, and I really am at a crossroads of like what I should do. So a little bit of context of something that you all know that I have ventured into, and then I'll talk a little bit about the other thing which you guys don't know that much about. But last year I started my brokerage account where I particularly focus on dividend investing. And although you guys know about that, I don't know if I have blatantly explained that I am on a race to get $100,000 in that balance. I have a humble $2,500, but in my mind, once I realized the potential, I was like, I wonder how quickly I can get to $100,000. And I have personally put on myself 5 years. I know that is ambitious, but I'm an ambitious person. And I say that because if I put all my eggs in my basket and I kind of focus on finding other revenues to make income, it's absolutely doable. And I say it's absolutely doable because I've already done this with my 401k balance, and it took me 9 years to get 6 figures. So there are some caveats too. I had a bigger shovel when I started my 401k journey. I was making a lot. I was making 3 times what I make right now, but it doesn't matter, because once you've done something, it's like it can be done again, because it's not just necessarily what you make, it's the mindset and the work ethic you put behind it. The other thing that's in motion that you guys may not know about, but it is also one of the 2 financial options that I have, is that I am seriously considering paying off my mortgage quickly. And I'm talking about also in 5 to like 8 years. I can do that with just modest changes, but if I were to kind of abandon my brokerage and like kind of set a steady amount that I pay, but it wouldn't nearly give me $200,000, but put that on paying off my mortgage, it is doable, because I do not owe a lot on my mortgage. I only owe about $80,000, and again, this is even a lesser amount that I would need versus the $100,000 in the brokerage account, right? And I've paid off a lot of debt before. The largest debt that I've ever paid was my student loans, which is $160,000. So even though my shovel isn't as big because I don't have the salary that I used to have, I don't have that big of a debt. So it's also not as daunting of a task. Paying off my mortgage would free up about $500 for me. And that's the part where I'm like, $500 is a decent bill. The part that I'm hesitant about though is there's some voice in my head saying you can pay up that $500, but with the way HOAs are going, your HOA fees are going to be up $500 in that 5 to 8 years anyway. So where is the benefit? That's the part that I'm like, I might as well just let it go, because I have a low interest rate. I don't have a 2% interest rate like the lucky people got in 2020, but it's a pre-COVID interest rate, and I'm sitting pretty. And a lot of financial experts say you should leave the house because it's not high interest debt, especially if you finance pre the panini, right? I would have to pray that my HOA was somehow capped and only went up maybe like $250 in the 5 to 8 years. I don't really know how realistic that is, because in Florida, HOA fees are going up. I do live in a better building as far as fees are concerned, but that is where I'm like nervous. Should I even bother committing to it, or should I go ahead and focus on the brokerage account? 2 automatic benefits that I know that occur when I pay off the $80,000, if that is the option that I pick, is that I can go uninsured. And that is something that is exciting to me. I know it might sound strange to say, like, why would you want to go uninsured in your house? Maybe because I live in Florida, and there's no point. If something were to happen inside the dwelling, the insurance company is not going to pay me either. The laws changed 2 to 3 years ago where it made it harder for me as the claimant to go after the insurance company. One thing about paying off that mortgage is that I would be free myself from $100 or more, because it'll probably be more at that point, to insure the inside of the walls, right? Am I a little scared? Not really, because living in Florida is a scary place. Now, the benefit of living in the building is that in my HOA fee, that there is some insurance for like the walls in the building. So it's still somewhat insured, but I'm so tired of my experience as an HOA. I don't want it to be insured, you know? And if I were to get like a hurricane deductible for a single family home in Florida is $11,000. Like, I might as well just save that $11,000 and put it toward fixing my house. Put that in somewhere where it's getting 8 to 10% return on investment interest wise, and I will self-insure that way. Another benefit is that I will have a paid off home. And there are some naysayers that say we always have to pay your taxes and your HOAs. Yes, that's true. But technically, the roof is mine. And I'm a firm believer you need to have one roof. Not necessarily a roof that you own. Renting is a viable option, but if you can have an opportunity, why not seize it? And the only barrier between that opportunity and me is $80,000. So I need to figure out quick what's my focus going to be. With the brokerage account, getting to the balance of $100,000, that's, which I'm hoping to do in 5 years, maybe 8, but 5 to 8 years, that would give me a income of $250 per month. And that is the exciting part that I'm looking forward to, for the main reason of I'm getting older. Around that time, I will be in my early 40s, worst case scenario, 45, and I feel that having that income secured for me is only a wise decision. Knowing that that's going to be coming to me makes me really excited from at this point at $2,500 to like get it to as high as I can. So when I get the dividends, I can reinvest it and reinvest it and reinvest it. Now at the moment, I only make about $50,000. So getting to $100,000 is a tall order, but I know it's doable because I just have to put some effort into finding other sources of income, and I'm working on it. Recently, a source of income has come to me and I'm very grateful for it. And on top of that, YouTube is something that I'm trying to monetize. So while you're here, if you're still here at this point, please like this video and please comment below to get some conversation going, but also this can get out to other people in my endeavor of trying to monetize my channel. But regardless, whether it's YouTube, whether it's tutoring, whether it's other things that I am going to endeavor for in these next few years that I know are possible, there's a way to find extra money. I could even get another job because I don't work 40 hours a week. There are ways to get to the point where I need to, and that constant river of at least $250 coming to me, I think is a really good goal. I just don't know which one I should focus on, because I'm not gonna lie, the thought of the house nags at me. And the reason why the thought of the house nags at me is because I have come across 2 people now that have done it or on the precipice of doing it. The first one, they're both YouTubers, but the first people that I came across was a married couple. They go by the tag His and Her Money. They're YouTubers and they're also podcasters. Way about 10 years ago, I think they started their journey. They paid it off at least like 5, 6, 7 years ago. They just wanted to pay off their home, and they did it. And I think their balance was like $300 something. And since then, they've been able to do many things that they would have never done if they were tied to a mortgage. Second person that I've come across is this woman named Seneca. She lives in Ohio with her husband and her 2 children, and two children. And she is on her way to paying it off like in the next 6 months, maybe September, but if not September, by the end of the year. And they're doing it on one income because she recently went, or 1.5, she went down to like half her hours because of the toxicity of her job. So I'm just like, I know it's doable. And when I watch her content, because I only really watch hers now, she gets a lot of naysayers, and I'm like one of the people rooting her on, like, you can do it, you're so close. And I'm just like, yeah, 80,000 does not seem like a lot when you really think about it. So it made me compile a bunch of pros for the house and then also some pros for the brokerage account, and I'm gonna read them because I wrote them down because I can't remember all that at the same time. So pros for the house are that it would be one paid off roof guaranteed. And there's something about having one place to lay your head that if you have the opportunity and it won't make you bankrupt, I think it's a good decision to make. And keyword, can't make you bankrupt, because owning a house in this day and age can make you bankrupt. So renting is a viable option and a good option for most people in this economy. Next thing is I would have an extra $600 a month if needed in my 40s. I said $600 because the rent portion is $500, and then I wouldn't have to pay for my insurance, which is at least $100. I don't know what's going to be in 5 years. And then I'm going to be getting older. I don't know if I'm going to get sick or stuff like that, or just tired easily or irritated easily, because I find myself irritated as I get older. I don't have to work the 40 hours, and that can sustain my lifestyle. The next one is that I can get a second house with more peace of mind if I wanted to, which another goal that you guys may not know of, I would like to get a house every decade. I got this house at 31 or 30. 40, I would like to. I don't know if I can, but I mean, I have to 49 to actually get it, but if in that second decade. But if I wanted to, with one house paid off, it's chilling. You know what I'm saying? It's not that big of a deal for me. And then the last one is less debt, because right now the only debt that I have is my mortgage. That's it. I don't have anything else. So I'm just like, yeah. Pros for the brokerage is that it will be an asset that I have that is attached to no debt, worth at least $100,000. Like, that is a wonderful thing to have. I think probably less than 25% of people can say that they have that. The next one is that I would have $250 of money coming into me monthly and growing, because once I hit that, I can just reinvest and maybe get 260, 270, blase swaze. Like, I can pretty much guarantee that as long as I don't touch it. And then the last one is that potentially offsets my mortgage by $250. So if I choose not to go the mortgage route, this helps me, and then maybe I can guarantee once I hit that, I can just bevel it straight to the mortgage and maybe take a pause on doing the investing with the brokerage account and getting it from 100 to 200. I can just focus the 250 and the income that I'm already making and bevel it to my mortgage. Both of these options are my way of financially preparing for something later that is inevitable. Do I know what that inevitable is? No, but I know that it's inevitable. Every decade it seems like there's some type of crisis, and I do not want to be resting on my laurels chilling. Do I make time for fun in my budget? Yes, but I think it's really important in this decade and probably the 40s decade to make sure my money's working 2 to 3 ways for me. This strategy has worked for me in the past, so that's why I'm sticking to it. The way I know that it's worked for me in the past is that I bought my house when I didn't necessarily need to buy my house. It wasn't always fun to dedicate myself to buying a house, but I'm so glad I have the house now, because my house at this point is affordable housing. Living in Miami, it's very affordable. And had I waited, because I was making money, I didn't have to, I could have got a really nice apartment, whatever, I would have been priced out of housing. So I know that, when you can do something, it's when you do it, and you don't presume that later on you have the next opportunity. That is not always the case. So yeah, y'all, that's what I'm thinking. Let me know in the comments what option you think you would do if you had it. If you have some insight that you see that I'm not seeing, also please let me know in the comments, because nothing's set in stone, but I do know I need to make a decision and focus on that. And then once I focus on it, don't look back, which I tend to be good at. But that's where I'm at right now. Thank you guys so much for hanging out with me, as always, because you did not have to come here, you did not have to watch, but you did, and I'm very appreciative. Until next week.